Be honest. How many times has the market faked you out, hit your stop loss by 1 pip, then blasted in your direction without you? Oh yes, I've been there, so I know the pain. It's excruciating. Stop loss after stop loss. I've had it. So what if I told you there's an indicator that shows where price is likely to move next before the move happens? Would you believe me? No, let me show you how to use LuxAlgo's predictive channels so you stop getting trapped and start catching the smartest trades on the chart. Now, I need you to stick with me until the end because the last setup that I'm going to be showing you, that's literally the one that you want to plug into, because this is the one that institutions use to load positions quietly. Once you see it, you'll never trade the same way. So grab your pens and your notepads and let's get locked in. Now, whether you trade Bitcoin, NAS, US 30, Forex pairs, or even gold, and you're tired of getting wicked out, this video is about to be your secret weapon. Let's lock in. So what exactly are predictive ranges and how can they actually help you to win? Predictive ranges map out where the market is trying to go. There is no lagging behind price. There is no repainting behind price. It literally forecasts dynamic support, resistance, and the trend mean. Think of it like seeing the market's roadmap before the traffic starts. Predictive ranges can literally be your trading GPS to be able to lock in great moves using your support and resistance levels. Now think of it this way. Most traders lose because they enter too late, they chase candles, they put stop losses in obvious places, and they have zero idea where the real structure is. So predictive channels fix all of this by showing you exactly where price is likely to bounce, reject, or even reverse. So now I'm going to show you the 3 best entry models that you can implement when using predictive ranges. Number 3 is the best one, so make sure you stick around until that one. Now let's get into setup number 1. This entry model is all about the smart money bounce. This is when price taps the lower channel and starts slowing down. That's not random. That's where smart money grabs liquidity. So this is where you wait. You wait for a rejection candle and then you enter on the next candle. So you need that rejection candle to close to show you the rejection. Once it does, you're able to get in. Literally, your stop loss will go below the channel and your TP at the opposite side. This is simple, this is clean, and this is stress-free. Let me know if you think so down below. So let's get into entry model number 2. This one is all about the midline re-entry zone. This entry model is for the one that normally has FOMO, because it saves you from FOMO. If you ever see price falling or flying without you, just relax. Be patient because it will come back. It always returns to the mean zone. So in this case, you'd sit on your hands and wait for price to get back into the midline entry zone. You would wait for it to get to that discount entry in that downtrend. You're not going to be chasing. This is a high win rate setup. You're gonna be patient, no pain, no rush, and look at that beautiful play out. Now let's get into setup number 3, the one that you've all been waiting for, right? That's the one that I promised from the start of this video. This one is called the institutional break and retest model. When price breaks out of a predictive range with strength, with aggression, don't ever enter immediately. That's where retail traders get trapped, and I don't want that for you. You need to wait. Wait for the retest of this level. Wait for the retest specifically at the exterior of that channel, because that's where the banks enter. That's where you enter. Now, when you enter here, the risk to reward is pretty insane. This is where you get value for your setup. This is where you are able to lock in profits like never before. So I want you to make sure you hit that thumbs up if you're finding value in this setup, because this phenomenal indicator is about to give you so much bag on the charts. Now, I wouldn't be doing you any justice if I didn't get into the rules. And of course, there must be rules. This is trading, and for you to be in this game long enough, you need rules. So make sure you're locking them in. These rules are simple, and they're rules in terms of where to put your SL and where to put your TP. Rule number 1, SL goes just outside the channel's exterior. Whether you're buying or selling, make sure that your stop loss is at the top of the ranges or at the bottom of the ranges. Number 2, TP at the next channel or at your structural candle that you can literally see. Number 3 is what you have to lock in, which is literally your risk to reward. Minimum 1 to 2, but most times you'll be able to lock in 1 to 3 or even 1 to 4 easily. Those are your rules. Now watch this. Price taps lower channel, rejects, breaks midline, hits the upper channel. That's a clean 1 to 3 with zero stress. Now imagine if you stopped taking emotional trades and only took setups like these every day. You'd trade less, you'd win more, for sure you would, and most definitely you would actually feel like you know what you're doing. So if you want the full predictive ranges sniper entry strategy, I want you to comment predictive strategy down below. And if you're serious about leveling up, smash that like button so more traders stop getting manipulated. Remember, put God first in everything you do, because if he's in it, without a doubt, you must win it. If you've made it this far in the video, that means you qualify to become an all-star. Our free Telegram is linked down below in the description, and I want you to go watch this follow-up video so that you understand fully about support and resistance. Stay sharp and don't stop shining on the charts.